Okay, hi everybody, welcome. I'm super excited tonight to be hosting the second edition of the FIBREE Global Webinar Series. Tonight it's all about digital securities for real estate. I'll be your host this evening. I'm Gordon Christian, the regional chair for FIBREE in Central Queensland. For those new to FIBREE, FIBREE is the foundation of international blockchain and real estate expertise. We founded in a couple of years ago. We have over 60 communities around the globe now with over 6,000 participants. In the background, joining me tonight, I have Joe Bronkers and Florian Hunter that are from our board, from the FIBREE board, that'll be assisting me tonight. So I hope everything goes smoothly. So yeah, look, just to kick things off, we're going to get straight into it tonight. So while the focus in the mainstream media, boardrooms, every futurist event around the world, as recently, it's been about Bitcoin, cryptocurrency, blockchain, and any new kind of infrastructure. A new kind of infrastructure is being developed, and for digital assets, and that's called digital securities. So unlike traditional securities, digital assets are programmable assets. They offer a 24/7 means of exchange instantaneously, and at a very little cost, a very low cost, and have a host of other capabilities. So while this whole infrastructure is being developed, we're having to get new regulations in place, and there's a whole collective of people working around the globe, hundreds of thousands of the smartest people around the globe that are working to meld the old system, to the evolution of the new. So tonight we've brought together three of Asia's leading forerunners in the development of this space. So really excited to bring together Oliver Siah from Singapore. He's the regional chair for FIBREE, also the co-founder and CEO of Fraxstore. We have Eiji Nagahara from Japan. He's the CEO and lead of Lead Real Estate Company Limited. And Julian Kwan, someone I've been following for quite a long time from Singapore. He's the CEO and co-founder of InvestorX. So I just want to kick things off. Being an Asia event, I think focusing firstly, I'd like to have a chat about what's going on in Japan. In the past year, Japan has shown noteworthy levels of adoption surrounding digital securities. Today, we have Eiji Nagahara from Lead Real Estate. And Eiji, you're doing something very special, something different to grow Lead Real Estate. If I'm correct, you've issued or are issuing a digital security to raise capital by offering direct investment into Lead Real Estate. So I just wanted to have a chat with you about that, and if you can share a little more with us about that issue and how you're working with Securitize, Grip, and Rialto. So first of all, I've got three questions for you. We would like to hear why you decided to start this initiative and how you are preparing to issue these digital securities.
とりあえず、簡単な自己紹介で、その後に。
Good morning. Nice to meet you. My name is Eiji Nagahara. Thank you very much for inviting this webinar. I am a real estate developer in Tokyo and the US. Housing, building, investment condominium, linear building.
はい。で、それで1番目の質問に対しての回答。
First question?
はい。
Okay. Token, what will become a new currency? I think that it will be a necessary means of raising funds in the future as it emerges. I am attracted to be able to raise funds from all over the world. One question.
Yeah. So that was his answer to your first question.
Yeah, sure. So I see that, by using this method of digital securities, you're able to raise funds from all across the globe, not just from Japan. That is correct, yes?
Yes. 日本だけじゃなくて、海外の力を使って資金調達するんですよね。
Yes, of course.
Yeah, excellent. So in getting ready to do that, have you already issued those securities, or is that something still that's being worked on?
まだ発行してないんですよね。
Yes,
はい
yes, yes. 今、
ちょっと
調達中だ。
今、はい。
Capital rising.
Yeah, so right now he's still working on the raising part. So the issuance is open, and it will be open until the end of this year. So he's still currently in talks with a few investors right now. So he is right now.
Perfect. And the original partners you were working there with Securitize and Grip and Rialto. You guys are all working to bring this together?
Yes.
Yes, of course.
Excellent. Yeah, I think the work that is being done, certainly those companies, particular Securitize, they're certainly looking to lead, really spreading their tentacles throughout the globe to assist in the development of these technologies. So, I'm very interested to follow that and see how that all goes for you. So the next question I'd like to ask you is, where and how do you see the market for these digital securities? So how big do you think this will be?
Because tokens will replace money and easy to use and convenient. I think the stock market will change in this way.
So you think that the transition from the current system to a fully digital system is just inevitable?
Yes. Exactly.
And in your experience there in Japan, how are they structuring themselves to be able to enable that? Are they making very progressive moves with their regulations and to make this happen?
日本では STO どれぐらい進んでる？
US の10分の1ぐらいって言ってる。
10分の1。So it's about like America. So like in Japan, it's actually still quite slow. They have a history of that. So basically, I mean, if you compare it to America, where Japan's at right now, it's probably about 10% where it's at. So it's been quite a challenge. Like there's no laws that's been regulated yet in Japan. It's still just starting. So that's the biggest challenge right now for him.
Because my company got SEC regulation last year.
So he's doing the fundraise through So he's doing it in a way that's quite different. So he established an SPC in the Cayman Islands, and the fundraise will be done through under regulation DNS. So that's the way he's going about the STO. Excellent.
Thanks for sharing. Some good in-depth knowledge in that. So, just in your opinion, there is benefits in setting up for digital securities. There are also some challenges of issuing digital securities compared with more traditional ways of funding your projects. So, what are your opinions on the benefits?
Digital security is easier to manage. The management cost is also low. The speed of transactions is also fast.
So that's how he feels what the benefits are.
Yeah, excellent. And I think that's pretty much why this has all been created. So what would be your biggest challenges right now?
The challenge is to expand the transactions with investors all over the world, and even unlisted companies can be trusted once they succeed. It is important to get creditworthiness. In addition, speeding up global expansion will be a challenge.
And I'll just add another question in there. Once you have established the setup for the digital securities, have you already earmarked possible exchanges where they would be tradable?
そうもし成功して取引所はどっかでなんか決まりそうですか？取引所。
希望はね、希望はT0ね。ファーストT0。
So
in US.
yeah, so he's right now he's trying to, yeah, he's targeting.
Target is T0.
Yeah.
T0. T0. Do you know T0?
Oh, Tezos, yes.
Yes, yes.
T0.
Okay, sure.
T0.
Excellent. Well, look, I know that you've been pressed a little bit for time today, Eiji. We brought this forward and got you in nice and early. So I want to thank you kindly for sharing us what your company's doing. We will watch it with keen interest. We certainly, yeah, it'll be on the top of our agenda to keep an eye on where you guys are going. And thanks for participating with FIBREE. If you're not already members, then certainly join up with us. And my role in the space is certainly to create adoption. I'm not developing a project. I want to help companies like you get traction and spread the word around the globe. So thank you for your time today.
Thank you so much. Nice to meet you.
Thank you very much.
Okay, so guys, we're going to move along. Eiji has to go to a pressing meeting, so Daniel will stay with us for the questions for later on. So I just wanted to put forward a brief introduction for FIBREE. I'm really glad to hear today that we've got people from 18 different countries joining us. We had about 38 registered, so it's quite a fantastic global event, and we'll be recording this and sharing it with others. So yeah, as I mentioned before, I'm a regional chair from Australia. Down in Australia, we've set up 5 different chapters in our capital cities around Australia. So we're very active down here to spread the word and help guys like you, guys that are developing projects, people that are interested in joining in the digital security space to help you guys get traction. Just if I could move my screen along. So just look a little bit about FIBREE. You know, if you guys have checked us out, if you're not familiar with us, you could have seen on our website that we aim to bring, you know, our aim is to be a leading international network of exchange of knowledge between the real estate industry and the IT sector, and particularly blockchain. Florian, if you could help me out there, I don't have control on my screen there. So just going back one slide there. Sorry, guys. Yeah, so I guess that when you're developing out a new system of like digital securities, we've got to create some realistic expectations. So that's what the idea of FIBREE is. What can we do and how are we going to do it? It's bringing together the pioneers and exchanging insights. That's what we're doing tonight. And then we want to contribute to the implementation. So FIBREE, 2 years old. We're now in 5 continents. We have major partners and sponsors. You'll be able to check those out on the web. We've got 15 in total. There's 106 chairs and a network meetup of over 5,000 people. So, you know, it is a place that's we're aiming to really assist people here. So you can see on our map where we're all positioned. Anyone that's joining us tonight that isn't that may be interested in being a chair with FIBREE, then you can reach out to us and join that network around the globe. So our next presenter this evening is Oliver Siah. Oliver comes from Singapore. He's the regional chair for FIBREE, the co-founder and CEO of Fraxter. Oliver, you come with some solid experience in real estate, particularly repositioning distressed commercial assets, and have been working very hard to establish Fraxter. Fraxter is a blockchain-enabled real estate co-investment platform. For people, so yeah, your project looks to me like you're using the new digital security platform for your own developments. And I'll have a question for you later as to whether you'll be whether that platform will be available under license to others. I was also very interested to hear in our chat later in the work that you're doing with NUS and the real estate internship program over there. So I look forward to also hearing about that. But for the minute, I'll let you take it away and share with us your presentation about blockchain securities for real estate investment.
Okay, thank you, Gordon. Can you guys see the screen?
Yes.
Yeah, I've got you there.
Yeah, awesome. I'm Oliver Siah, CEO and co-founder of Frexter and regional chair in Singapore for FIBREE. Today, I'll be presenting on blockchain securities for real estate investments. So just a quick note, this presentation is for educational purposes and general information only. So the theme of this webinar is digital securities for real estate. And my focus will be on blockchain securities for real estate investments. I've broken up this presentation into 3 distinct chapters. So why is there a need for blockchain securities in real estate? What are blockchain securities and how do we create blockchain securities for real estate investments? So I began my real estate investment journey nearly 18 years ago as a young 20-year-old. I was presented with an opportunity to buy a commercial real estate asset here in Singapore. The entire transaction process took approximately 3 months. I think this is very similar throughout the world. I also had to come up with about 40,000 for the initial deposit and stamp duties. While having no savings as a young 20-year-old, I had to borrow that amount. And to make matters worse, the property was vacant initially and I had to channel most of my salary to pay off the mortgage on the property until it was finally let out. Despite this, I made a handsome profit when I sold the property 3 years later. I have since gone on to invest in other properties directly or through REITs and property funds. So for those of you who have invested in property or are planning to acquire an investment property for the first time, this story may resonate with you. From this experience, we can see that there are some problems in direct real estate investment. First is the high capital outlay required to acquire the property. Even for property funds, fund managers typically require minimum investments of between $250,000 to about $500,000. Second is the illiquidity of the investment. Buying and selling a property takes as much as nearly 6 months, 3 months for acquisition and 3 months for disposal. So it's a very illiquid type of investment. Third, accessing quality real estate products as an individual is very hard when the market is dominated by high net worth and institutional players. So REITs seem to check all the boxes, but the return profile is very different from direct real estate investing. If you want a steady income stream from a real estate backed instrument, REITs are great. But if you're looking for the big kicker at the end when you sell the property, direct real estate investment or property funds are the way to go. This explains why many of the real estate millionaires and billionaires still choose to directly invest in real estate. I first heard about blockchain in 2016. This was during the ICO boom, where anyone could create their own crypto tokens and offer it to the market. Billions were raised for almost useless or even fraudulent reasons. That wave has since died down. But blockchain, being the underlying technology behind those crypto tokens, was actually a very good solution when it came into the real estate investment space. It is an elegant solution to create units of value on the internet without relying on a central registry. A central registry could be like if you have an Amazon or iTunes store account, those companies will tell you how much credits you have on their system. So they are the central registry that keeps account of that. Things start to get a little bit tricky when we try to operate without a central registry. To create units of value which can be transferred, such as cryptocurrency, there must be scarcity. There must be a finite number of digital tokens that could not be spent twice. For instance, if you receive one digital token from someone, it would be meaningless if that same person could send that same digital token to someone else. Blockchain does this by distributing its registry to thousands of nodes, which independently process and transmit any transactions on the blockchain network. To see how blockchain works, first we imagine two individuals entering into a transaction. They agree upon the terms of the transaction, and this forms a record. And to approve this record, each node within the blockchain looks back at the previous blocks to determine if the transaction is valid. And when a consensus is reached, the transaction is approved. The record is then added on into a bigger block of data. And this block of data is cryptographically linked to any previous blocks to ensure that the data is immutable. So using blockchain technology, we are able to create blockchain securities, which could represent capital markets products such as shares, bonds, debentures, or units in a trust. Investors will be able to hold these blockchain securities in their own digital wallets and could choose to sell or transfer these at any time. Using smart contracts, we can program the rights of these blockchain securities, which will be strictly enforced. For instance, during the offering process, the issuer of the blockchain securities can deploy smart contracts to create tokens and send them to investors' wallet when the investor sends payment in the form of cryptocurrency. Subsequently, when interest or profits are earned from the investment, returns in the form of cryptocurrency would be transferred into the investors' wallets. He can now choose to purchase goods and services or exchange it for fiat currency in an exchange. Using blockchain securities allows an issuer to easily manage large number of investors. This is because the managements and the rights of the token holders have been enforced by smart contracts. So let me share how we create such digital securities. First, we start off with the property. This can be any type of property located anywhere in the world. Next, we have to structure a holding entity. This entity can be structured in a multitude of ways for ownership and taxation requirements. This is currently no different from how we manage real estate investments today. The entity interacts with traditional players such as the valuer, property manager, property agent, or tenant to maintain the income stream of the property. So things start to get interesting when we tie in the digital SPV layer. This can be structured as an entity or trust. The digital SPV will own the rights and interests of the underlying property through the holding entity. The digital SPV creates tranches of digital securities through a technology partner. This can then be issued to investors using smart contracts on the blockchain network. Ownership details will be logged on the blockchain ledger, securing the rights of the investor. In a secondary market exchange, the same investor can sell their blockchain securities to other investors on the network through smart contracts. Ownership details, in this case, will be updated on the blockchain ledger, effectively transferring ownership of these securities to the other investors. So that's basically how we actually structure our investments over in Fraxter. And if you have any questions, feel free, you can contact me through email or LinkedIn. And that's the end of the presentation.
Fantastic, Oliver. Thank you for sharing that with us. That was a really good little deep dive into the whole process from people from the beginning right through to the experience. I really enjoyed that presentation. So thank you. We'll get to the questions I had for you for later. So our next presenter this evening, we'll get through to Julian Kwan. Julian Kwan is CEO and co-founder of InvestorX. Julian, I've been following your work for quite some time now. I'm also on your WhatsApp mailing list, so I get you have the best feed on the planet in regards to what's happening in the digital security space. So thanks for that. And you're clearly one of the most leading, passionate leaders in Asia right now. So Julian, I'd like to congratulate you on InvestorX being awarded the Monetary Authority of Singapore's Proof of Concept grant in September this year. I see you're also leading the Singapore effort to the US department's blockchain and digital asset trade mission in December this year. So Julian, I am giving you a big wrap here, but yeah,
Thanks a lot.
it's all right. So,
yeah, appreciate the invite. Thanks, thanks for having me, and good to see Oliver. I haven't seen you for a while, but good to see you here and meet everybody else. Thanks for that. I know you've
kick things off, Julian. InvestorX, you'll cover it pretty quickly what you guys are up to. So I'll let you get that away. Earlier this year, I see you also closed a successful strategic investment from Japanese listed fund Lifeful. So opening the way into the Japanese market. So I see you also working with the likes of Australia's Jamison Capital, Liam Chin Chen's Charismatic Fund, and have recently entered into partnerships for the digitization of some other assets like Eiji whiskey. So this is going to be a great conversation. You're more than real estate. You're all about digital securities. So I look forward to hearing for what you've got to share tonight.
Kind of demystify some of the thoughts in the space and some of the ideas and plays that aren't seemingly the right way to go about things. But yeah, sure. Should I start flicking through the screen?
Yeah, absolutely. Take it away, Julian.
Let me see if that works. I can see my mouse there. Oh, there you go. Yeah, so InvestorX actually was one of the first real estate crowdfunding platforms in Asia. Started as InvestorCrowd, but we got a license to issue securities and executed about, I think we put funds into over 28 private equity deals, all real estate actually, private equity real estate deals. We got excited about blockchain in 2017 when, after running one of the first investment platforms online in the real estate space, there were a lot of issues still with that platform, and predominantly based off, us signing paper contracts and the first generation of online investment platforms was quite low technology. So look, along came blockchain. We decided 3 years ago we'd look into. Note here is that public listed REITs are great. They provide transparency, tradability, in somewhat of an immutability kind of concept. But because of the nature of them, you need huge money to launch a REIT. It only distributes income. You can't share in the equity upside. You can't do debt typically. You can't do single asset typically. So it's really just for the biggest projects in town. So we think that what we're all trying to do here is bring the elements of publicly traded assets, which is transparency, tradability, which is all the things that blockchain bring, and marry them with the returns of private equity real estate and private real estate. Because a REIT, a typical REIT only pays 5% annually, but you won't really find private equity real estate guys looking at doing deals unless they can get a 15% return, give or take, annually. So this is the analogy right here, that in the private markets, hundreds of years have been going on, and we still do things exactly the same way that we've been doing them for hundreds of years. So, I'm not going to touch on it. Actually, any security can be digital security. The digital part is simply a wrapper around the asset. The asset's still the most important thing. That's why a lot of the first security tokens in 2017, 18 were failures, because the underlying security there wasn't anything there. So we think the people should be looking at it. The digital security enhances the asset. It allows for a lot more added value, but ultimately investors need to be looking at the quality of the underlying real estate. And if that's good, you can launch these projects. And if it's not, the digital part's not going to save a terrible project. I'm going to go through this because so we've gone through like what are the basic elements. So I put up the title, what do people need to think about when they do this? So I try to pack literally years of thoughts into this very short presentation. But the challenge over 2017 with real estate security tokens was all the projects were terrible. They were all tech guys trying to launch real estate deals. The challenge after that, when we started for 2018 and 19, was we didn't have any infrastructure. When you want to launch a security, a digital security, you still need the same infrastructure that you needed to launch a normal security, paper security, plus you need the technology layer. So what does that mean? You need broker dealers, you need lawyers, you need tax, you need exchanges, you need custodians. All that was missing in 2017, 18, 19, because to get licenses, it takes years. It's taken me 2 years to get my exchange license, and I'm in the final stage now. And I had to prepare for that for 6 months. So it's taken close to 30 months. So that's now being solved. So what that means now at the end of starting the 2020, we have the right infrastructure to do an end-to-end issuance. And by the way, most people only know about token issuance companies in the real estate blockchain space. Securitize, Tokeny, great companies. They have a great value proposition, but you can see from this slide, they typically do part of number 3. So they do the token issuance. That's great, but who's going to do the rest of it? So there's no use launching a security token to nowhere. It needs to be plugged into the capital markets, and it needs to be plugged in via the same technology layer. So if you don't have that, then it's hard to really justify why you should do a real estate security token in the first place. If you look at the value propositions of security tokens, digital securities, tradability, global audience, secondary trading, well, if you're a tech company and you provide token issuance, you can't do any of those things. So anyway, so that's what we do. We allow for a one-stop shop, which then can create. So if you think about trying to launch a real estate security token today, if you don't have a one-stop shop, you have to find all the traditional players and then make sure that they're all on the same blockchain. So that's why it's been such a difficult birth for the industry, because there's hardly anyone that can do that. But people who want to launch, they've got to remember that all of these normal things have to happen. We're just simply issuing tokens instead of paper, so we can open up a whole lot of value. And there's a lot more thought process that to go into that, because if you think about a traditional real estate fund, you sign a piece of paper and put the shares in your drawer for 10 years. Well, now if you've got a token, you can do something with it. So the issuer, the fund manager has to think about what all of those things are going to be. Are there distributions? How are we going to do that? Where's it going to trade? Who can touch it? Who can buy it? So it's much more exciting, but it takes a lot more thought. So that's got to be thought about at the structuring element at the beginning, to make sure that you've issued something that's actually going to work. And of course, with all the blockchain wars that have gone on throughout the years, this protocol versus that protocol, public versus private, you've got to make sure that your offering is protected, future-proofed, for some of the things that could happen, whether the public protocol forks, and again, all of these things I'm saying, we could talk hours about each component of it, but I'll just try and get some basic stuff out for people. So back to, what do you need to think about? You need to think about the compliance of this, who can buy it, who can see it, who can trade it, who can issue it. Again, all these things that you need to think about normally when you issue a normal real estate fund, but typically in that world, nothing happens. You issue the fund, someone signs up for 10 years and nothing happens. So you don't have to think too much about it. So there's a world of possibilities that's created by this. And I should have said at the beginning, we're right now at a point where we're tokenizing securities. They're not really security tokens now. What we think is a better terminology is a tokenized security. There's a paper fund somewhere, and we're doing a digital representation of the shares in the paper. So it's a tokenized security. And when we think about security tokens, we really think about a paperless entity that's digitally native. And that's a real security token. Now, at the moment, most governments around the world are still issuing their new funds in paper, but Delaware, Thailand, Switzerland, and it'll come where governments that issue new funds and new companies that are used as investment vehicles to invest in real estate will be done with the paper, and they'll issue on distributed ledgers, and they'll be all security tokens, and we'll stop talking about digital securities and security tokens, and we'll just start talking about real estate again. We're not at that point yet, of course. We've got to get across there. But there's all these things you have to think about apart from just issuing the token. And then this is just some of the stuff that we've built in our platform for issuing the smart contracts and making sure that they're compliant, and that they the issuers, the fund managers, know what's going on at all times, and can also actively service that offering. yeah, we've done a bunch of different projects. We're obviously trying to help the industry as much as possible. We're integrating with more protocols. So a couple of more public protocols are integrating with us, which means if you want to launch a digital security on, say, Tezos or Hedera, you know, there are new partnerships that we're forming, that would be a happier home. We've been able to get great support from the regulators here to operate with both private and public blockchains, which is really important because every security token in the world that anyone's ever heard of has been issued on a public blockchain. A lot of regulated platforms around the world aren't allowed to touch public blockchains. They can only use private. Again, that whole thing we could talk about for hours as well, but we work with both. We're happy to, you know, see if we can help anyone who's got real estate projects or any investors that want to look at high quality projects. We've just signed up a £600 million real estate project in the UK. It's doing a £200 million bond offering, and it produces a significant income from its assets. So again, we've now transversed from the guys trying to sell a house on the blockchain for a Bitcoin, which made no sense, to, you know, institutional players with real products, with real securities that people want to buy, and a real purpose for doing the sort of digital securities. And I'll leave it there. Anyone can look us up and track down the team, but I don't want to take up too much more time. Thank you.
Yeah, thanks, Julian. That was pretty mind-blowing, I think, for anyone in the space operating at that capital market. I guess, yeah, it's a good analogy looking at, you know, there's some amazing projects where they're just simply digitizing, you know, real estate assets in Detroit, close to the new Ford motor plants where mum and dads can buy real estate. But when you start talking capital markets, I mean, it's clearly an expertise for you. And I'm not sure of everyone who's in our group here tonight, but you know, we've sort of tried to cover a broad depth of conversation here. So we did have one question. I think you did raise it here from Aqueous. So the question is, the organizations that have successfully tokenized real estate, have they created their own blockchain network or are part of an exchange? So Julian, maybe you could cover that one for us, as in you guys have created an exchange for the assets that you guys are creating.
Yeah, I'll see if I can try and answer that. So the protocols are purely the you know, the technology that's storing the digital securities. So we're agnostic to those protocols because investors and fund managers don't care. They want to come and buy $10 worth of real estate assets that's producing a 12% income. So I think that ultimately the most people issuing are using someone else's protocol. I haven't heard of any real estate projects that are building a real estate blockchain themselves. If you were to say that, the only way that would make sense is if you basically decided to build a private blockchain. So it was a permission-based blockchain. Permission-based meaning those accessing that blockchain had to get permission. So you might think about, I don't know, real estate agents and lawyers or whoever's involved. But I haven't heard of anyone building a real estate blockchain that's blockchain, because blockchains are asset agnostic to what goes on there. So that's hopefully that makes sense for us. We have the key infrastructure that's needed to advise, deal, issue, invest, trade, custodize a security, and we're digitally enabled. The smart regulators around the world, if you think about securities laws, they don't reference paper. So you don't need new laws for digital securities. You don't need any new laws. It's a security, how you issue and trade it. There's laws for that, and there's a reason for that. So smart regulators have said you just need the traditional licenses to do this. If you want to get into the space, you obviously have to then build your own technology layer and probably get them to look at that and check that. But hopefully that answered the question in a bit more color.
Yeah, perfect. Just a question there for Oliver. I noticed if you go and log into your platform and also into InvestorX's platform, you have to be an accredited investor to invest in the offerings that you guys are providing. Is that correct, Oliver?
Sorry, could you say again? You came in broken.
Oh, sorry about that, Oliver. So just to be an investor on with Fraxtor, when you log into your platform, you have to be an accredited investor. Is that correct?
Yes, that is right.
Sure. So just that's due to the rules in Singapore, or I guess there's a lot of questions around blockchain and cryptocurrencies and likes. And as we move to the digitization of real estate assets, is, you know, can the ordinary guy buy a share in a multi-million-dollar building? At the present time, it looks like most countries require you to be a accredited investor.
So we are relying on certain exemptions within the Act. So we are unable to target retail investors at the moment. I would say that the platform is still very new. This tokenized real estate market is still very nascent. We want to approach this in a more systematic and gradual way, instead of diving in to get retail money. Targeting retail investors requires a lot more compliance requirements, especially on the issuer side. In Singapore, the issuer cannot target retail investors without a prospectus. And the prospectus requirement actually puts off many of the issuers. But if we are targeting an accredited investor, the requirements are a little less stringent. That is why a lot of fund managers and issuers tend to still operate in that space. Yeah.
Excellent, excellent. And Julian, just the difference when you guys started out as crowdfunders and then switched to digital securities, what are the main differences there for having been in the crowdfunding space to now in this space? Did that?
Yeah, good question. It's kind of related to what we're just talking about now. I think what people don't really understand is that most investment vehicles for larger real estate projects are not structured or for a lot of investors. And a lot of bigger projects don't want a lot of investors in the reasons because they don't want all the paperwork. So that's sort of some of the main reasons we moved into the space is because of that problem. We think that over time, the implementation of a digital issuance platform for every real estate fund manager will dramatically reduce the cost to a point where issuing 1,000 tokens to 1,000 people is the same cost as issuing one token per se, versus writing 1,000 pieces of paper to people, like 1,000 paper contracts to people, and one paper contract to person is a world of difference. So I think, to the retail question, retail access, security tokens also started with the wrong types of issuers targeted at the wrong investors. So it was non-real estate people launching STOs to crypto guys. And that was the big mistake. Security tokens really have to start at the institutional level from an issuer and investor perspective. Once that gets ironed out, then it's very easy to add the smaller investors. But then it becomes, as Oliver pointed out, a regulation issue. Do you need to add prospectus? Do you have to do 10 times as much filing to be able to offer to smaller investors? On a positive note, though, I think two things. Even here in Singapore, the regulator has signaled 2 years ago they might allow retail access to the exchanges. That's a proposed idea. It's not guaranteed, but I think once they see the transparency of these private equity real estate deals, they will allow it, because there's no reason why they wouldn't. And the theory is pretty simple. If smart, intelligent, rich accredited investors bought it, then not so rich retail people can buy it from them. So that's positive. And I also think even more interestingly is tokens give us the ability to create new investment structures. When you think about why you and I will go into NASDAQ to interactive brokers today and buy a share of Apple and sell it this afternoon, and that'll be the end of it, and never read a piece of paper and not have a clue who's holding the share, which actually is not us, it's the CBCC. But the point is, in that trusted environment where everything's transparent, people are willing to execute, because all of these agreements are only paper agreements are only 100 pages because people don't trust each other. So in the digital world, in the right platforms and built in the right transparent setting, you're going to see a whole new world of real estate digital security offerings that don't necessarily have to be a full equity offering that requires all of the things that an equity offering requires, which will allow, I think, for a lot more, there'll be a world of new offerings. And I think this will bring a lot more offerings to, say, the retail investors. Because the other thing that, again, Oliver pointed out is a lot of people might be happy to take retail money until they realize that when they do that, here's the 50 more compliance documents you have to fill out. And then they say, I don't want to do that. So I think it's all going to improve, but it's going to take some time.
Yeah, excellent. Thanks for sharing that with us. We'll just head over to Daniel. We've got a question for you. What type, location, and size of real estate are you having in mind to tokenize as your first project? Now, I think that we covered initially that the raise you are doing at the moment is actually for an investment into lead real estate, but are you guys also looking to create tokenized real estate assets? And so, yeah, what type, location, size, and do you have in mind?
So so I'm just gonna speak on behalf of Mr. Nagahara, but we did have this conversation very briefly. Right now he's very focused on getting completing this fundraise, and then he's gonna think about which projects that he wants to tokenize into the future. But he's mostly aiming towards Japan right now. He's mainly focusing on Japan, and probably from the beginning, he's going to start with kind of more smaller assets to tokenize, just to feel it out, and then from there he's going to like slowly grow that. But for right now, he's mainly focused on his current fundraise for the actual company itself, in order to grow and to be able to do that in the future.
Yeah, I see that you guys have assets around the globe. So in Germany, is it the US as well? Oh no, Australia and Japan?
Oh yeah, so right now it's in the US and also in the Philippines. And right now, yeah, that's where it is right now. But his next target is the US. He has an entity in Dallas, and he's trying to slowly build that.
Yeah, perfect. Excellent. So yeah, I think there's a lot of work being done around the globe. I see many different countries. There's some great work being done in the Philippines by one of the companies there, certainly in the US. And yeah, I think in Australia, I'm yet to see Australia really kick into gear. So, you know, one of the questions I had for you guys is if we wanted to, if we're a corporate in Australia here and we wanted to use your platform, Oliver, is that something that would be possible for Australia to use your platform for Australian assets? And would that be able to be used under license?
We are actually looking to deploy the platform in Australia. That's another regulatory ball game altogether. But at the same time, we are also looking to fundraise for Australian projects. My co-founder has an extensive amount of assets in Australia, and then maybe in the next 1 or 2 years, we may start to bring on those assets onto the platform, or even more work with other fund managers in Australia to bring on those as well.
Yeah, and so when you do that, would the target then be global investors?
Yes, I think being a platform and utilizing blockchain technology, definitely we have the ambition to go global, but there are various regulations that we need to comply with. So we sort of have to conquer a country by country rather than target the entire world at the same time.
Sure, completely here. Julian, just with InvestorX at the moment, say you're doing a bit of work. Are you working on some projects in countries other than Singapore?
Yeah, we're a global platform for global product and global investors. Most of our deals, actually, the assets have not been in Singapore because it's been challenging to find any good deals here that if you don't have the large capital ready to put down straight away, you typically won't get that project. Yeah, so we've got projects in the US, in the UK. We've got a bunch of different groups wanting to take the business into different countries around the world. So yeah, there's lots of exciting stuff. In the last 2 months, it's really been more activity in the last 2 months and last 3 years, I would say, in the space. But I think that's due to the COVID narrative, driving the digital narrative forward. And everyone like us all here sitting on Zoom calls, and if we don't go digital, then we're going to die. So yeah, lots of amazing stuff starting to happen around the world as well.
Yeah, awesome. Just if I was in the real estate industry now and said, okay, well, obviously my industry is going to change, what sort of people would be contacting you? What sort of people would be most interested in speaking to InvestorX?
Oh, well, we've, you know, it's interesting. The BlackRocks, the PGIMs, the Blackstones, the biggest real estate groups in the world have all brought on heads of digital for the first time, right in the middle of COVID. So, you know, everyone from the top, sort of the top down now is starting to look at this, and they're all sort of sitting around the boardroom and saying, what are we doing digital and how does this work? The challenge for them obviously is, you know, let's go digital, you know, question mark. So, you know, it takes organizations like yourself and someone like yourself who's doing all this great work, spreading the word and getting more and more people involved, because again, you need all that infrastructure. And that's where, so it's really a matter of, and it's coming away, the messaging to these groups needs not be liquidity for liquid assets. That's all that anyone said about security tokens, even though there was nowhere to trade and the asset wasn't even tradable anyway. So it's really to the bigger groups pitching as a cost efficiency system. You've got 500 staff, 400 people are in back office admin. I mean, that's moving paperwork around. Implementing a digital not I'm trying to ruin jobs, but implementing a digital platform dramatically reduce costs and dramatically increase efficiencies. If you think about the size of the private equity secondaries market, which is hundreds and hundreds of billions of dollars, for real estate alone, it signals that there's hundreds of millions of dollars worth of invest. They just want to sell, but typically they can't because it's stuck on a piece of paper and that's it. So yeah, look, it's about efficiencies for the bigger groups. If you the liquidity, the liquidity question that comes out all the time is not a static question. People say, oh, where's the liquidity? It's like, well, let's talk about that. Where's the asset? How many people can see it? What's the performance? How big are the shares? You know, I'll go on and on with a list of things that are going to affect the liquidity of an asset, but obviously to be determined by the performance. But so we've got to go. We need a shift of just people sitting back and saying, well, you know, I'll do it if you can raise me $100 million. You know, I'll do anything if you can give me $100 million. To why don't you start to really understand and think about that this is the infrastructure for all real estate investments moving forward. Like this is it. So those that invest earlier will learn. They will come up with the best structures. They will then attract the best capital, and then they'll be ahead of their peers because this is technology-driven investment structures. This is not a piece of paper. This is programmable debt, programmable equity, new forms of the ways that we break down an asset. That's the exciting part. That's where it's going, and that's the message that I'd probably want to leave with everyone here, and what we should be saying to the big real estate groups that are all sitting there watching and maybe not doing anything, but wanting to do something, and giving them the right reasons to do that, other than saying liquidity for liquid assets.
Yeah, that's a really, really great point to hear. You know, I've watched this with, you know, we're all looking for the exchanges where these will be, you know, where the liquidity will be. And I think that's a very important thing. It's like, really, we're not actually trying to change the world. We're just actually changing the way that we're doing business right now and making it more efficient. So our clients are still our clients. When we want to shift a large portion of a large real estate asset, it's just going to be easier, rather than a complex REIT system.
I've been taking up way too much time, but the last thing I'd say, which I think is really exciting and interesting for everyone here to think about, is if you think about the one way that we typically, the structure of a real estate fund. So a real estate fund is typically 7 years, right? 7-year fixed life fund. That's pretty much how we do it. So why do we do that? Because people don't want to give you money forever, and they're not just going to give you money forever. So you say, okay, 7 years is a good enough time for me to actually make some money and build a building. And you know, the quantum of money doesn't matter how much money. I'm talking about this fixed life fund. So we lay this fixed life fund investment vehicle over a cyclical asset class. And then no matter what's happening in 7 years, we have to sell this fund. So if you think about USA, 2009, 10, 11, think about USA now, New York commercial real estate, 2020. It means that any 2013 vintage fund that now comes up today, let's just say 7 years today, we have to sell, and everyone's going to lose a ton of money. So if that was a digital structure that had a lot more flexibility to it and they didn't have to be forced to sell, then instead of everyone wasting 7 years of their time and losing a bunch of money, they might be able to, that they would be able to go through this period of time. So my point is, pretty much the one way we issue shares for all private equity real estate vehicles in the world has a massive fundamental flaw to it. And we haven't been able to do anything about it up until now. And this is one area of focus for us, and a huge value proposition that we all need to spread the word, about.
Yeah, perfect. So look, if you're,
I can't hear you, Gordon. I think you're frozen.
Yeah, that's a problem with his connection, I expect.
Okay.
I had one more question to you, Julian. In your ideal
time
world,
to my,
Oh.
I reach out
Gordon,
to.
you're back. Gordon, you were frozen a few seconds. Now you're back. Please
Sorry.
pose your question
Sorry.
again.
Yeah, sorry. It's great to see that Julian, you're promoting that the managers can take risks at the moment. This is the time to take some risks. The world is changing, and it's a good time. So just got one question here, and both for Oliver and Julian here. What's the minimum amount of transactions needed for a digital real estate security market, and how much time do you expect it's needed to realize this? So
I don't really know how to answer that. What's a market? More than a couple of people. I think. Look, I think in the end of the day, we've got an existing asset class. So we're not cryptocurrency, of course. So we're not trying to create something new and convince someone that Bitcoin's better than the US dollar. We're saying this is how trillions of dollars of real estate assets operate, and there's some fundamental flaws to them that can be fixed with this new technology. So the market's already there. It's a matter of, I'm going the wrong way. It's a matter of getting people onto the technology stack. So that's kind of how I see it. And I think the first trades for this is all going to be OTC. Like, people think also that I launch a real estate digital security, I belong in an exchange. It's like, most of you don't. And I don't mean that disrespectfully. I mean that in terms of, it's not the size and the type of asset that's going to have market makers, it's going to have the right fundamental characteristics for it to be in an exchange. However, it could certainly list on a secondary listing board in a digital security. It could still have secondary trading, but it's more of an over-the-counter type thing. So everyone's going to be, anyone who launches digital security can have secondary trading of some capacity, but everyone's focus on the exchange is really like missing the point. I mean, there's a reason why NASDAQ has the top 1% of startups trading in the US. It's because they're big enough, they've got to be, something that everyone wants, they've got to be easy to value, they've got to be transparent, and 99% of startups are none of those things. But they could still benefit from this, but we do need to direct the conversation away from exchange kind of do or die. Because then you get good questions.
I agree. So Oliver, just one thing, just going forward, what sort of size real estate assets are you thinking would be the best to be targeted to start with? Like 500,000, million, 100 million, 50 million? What are you thinking?
When we first started out, we were targeting assets from between 5 to 10 million. So I think that those, as a startup without much user base, that is, I think, quite ideal. As we grow, we're going to target up to about, say, 50 million. And we're going to stay in the sweet spot between 10 to 50 for now, just because that there are many institutional players that we are competing with for assets above 50. And so I'd like to stay in that sweet spot for as long as I can, so that I do not need to compete with the big guys.
Yeah, I think it's a great strategy, and I think you've got a real niche there that you're going to fill. So, guys, I think we're pretty much at the hour now. We're at 1 minute over. I really want to thank everyone for joining us tonight. Look, there's a bunch of connections to be made here. We're all on LinkedIn. The participants here, reach out to the guys, form the community, get involved in FIBREE. Thanks to Joe and Florian in the background, and we'll see you guys at the next session for FIBREE. We've got them posted there. They'll be on our website. January, we've got the academic board, land registry. legal and governance. So got a lot coming up, and thanks for joining us this evening.